Welcome everyone back to Deep Network. I'm going to be going over what exactly a stop loss is and how to find good stop losses based off of your entries, because I understand why, the trade will hit your stop loss and then go in another direction, but that's not an excuse to not use one. It just means that you need to get a better entry. Okay? A stop loss is essentially a specific price that you create, that you tell your broker, hey, once price gets to this number or X number, take me out the trade. I don't want to be in the trade any longer. And that's okay, because no trade is a guarantee when you're trading. All right. So how to find a good stop loss. All right. You may be wondering to yourself, okay, I have the right idea. I see we're in an uptrend. I'm going to go in for a buy. All these good things are just feeling super good. Let me get in right now, put my stop loss, wherever, and you just pray and hope for the best. No. When you are technically analyzing the market, you want to make sure that your parameters, i.e. your signals, things like that you see me sending on my live trading sessions on Tuesdays and Thursdays at 8 a.m. When you see me send those numbers, those are parameters that you're putting into your trading platform, your broker. I choose those parameters based off of structure levels. So I'm going to show you guys an example. As you can see here, we are on Bitcoin. Okay, you guys know I trade Bitcoin. That's my thing. All right. If I was to potentially look for a market idea, okay, we're going to mark it up just like how I would any other day. I would look to see what is my daily high and my daily low. Currently, we're on this candlestick. It's November 12th. Shout out to you. Okay, if today's your birthday, happy birthday. All right. So right here is our current candlestick. Okay. And price is moving. Price is moving. I'm going to mark my ceiling level, including my wick, because we don't want to cut that off. And I'm going to just use these wick rejections as a support. Okay, so I'll just make it green for you guys. So I'm just going to use that as support. Remember, your strongest levels will be the levels where your candlesticks have closed, because where candles close is where price truly wants to be. This is our range that we're working in, that we know price is going to play into for us to extract money out the market. When we drop down to the 4-hour time frame, we see a downtrend. Okay, cool. We identify our previous swing highs, our previous swing lows. We are seeing the market structure. We're in an overall downtrend. So what that means is, let me zoom in a little bit more for you guys. I'm not looking at anything past this. I don't want to see what's going on here, because this is just going to confuse you. You want to stay in the moment. So we go based off of previous structure levels, previous swing high to swing low levels. This is how you trap and snipe the market and snipe your entries. So now let's break it down another step further. We're on the 4-hour time frame. Okay. These are hot spots. These circles right here are hot spots. We know that price is going to make a reaction when it comes here, or it's going to be attracted to want to come back there. Right? So with that being said, what do we see? Price is kind of losing momentum. We're seeing wick rejection momentum. So that means that let's see what price has done in the past. Let's see where some candlesticks have closed in the past. Okay, here's a support level. Here's another support level. I like this one better because I have more than one touch. One touch there where the candlesticks close, one touch here where the candlesticks close. I don't know what this pattern is called, because you don't need to know the dojis and the this and that. Check out my candlesticks video. Okay, and I'll link it in the description box below on how to choose good structure levels based off of simple candlestick structure. It rejected here and closed. So that tells you that right here at 100,433, Bitcoin's not going to want to go any lower. And if it does, bye-bye Charlie. So that's how I pick my strong structure levels. I know there's going to be a reaction here because there was a reaction here in the past. Okay, so boom, let's say I want to go in for a buy, because when we're low, we buy, and when we're high, we sell, right? So we're approaching my floor. Let's drop down to a smaller time frame, an entry time frame. Let's see what structure is telling us on the smaller time frame. Let's see what the steps inside the skyscraper is telling us, right? We see a lower low. This low that's being created is lower than this low. Do you agree? Right? This high that's been created is lower than this high. Do you agree? Selling momentum, and then it closed, and it's playing and consolidating, stabilizing, and creating a sideways market at this new floor at 100,000. We drop down to an even smaller time frame. What do we see? An even more broken down version to explain what that sideways market was on the hour time frame. If price closes over it, I know it truly wants to buy up. This is a ceiling right now, but if price breaks and closes over this ceiling, there's a high probability that there's going to be more pressure from down here to go up, to then perhaps revisit that high up here at 106,000, okay? Or even if you want to go for a shorter move up to 102 or 103,000, where you see some other candlesticks close over in this area here, you don't keep your position for too long. But the moral of the story is, when we take out our long position and we say, hey, broker, put me in, coach, at 101,574. We see that right here. We drew our long position. So let's say, okay, price breaks and closes, it pushes up, and it gives us what we're looking for. What if price is not ready to do that? What if price is not ready to do this yet? What if price quite literally just wants to, no thanks. No thanks. What you mean no thanks? I want to, feel out over here instead. Or even worse, what be happening to some of y'all is it comes right here and takes you right out that stop loss. It's not funny. And then it goes up in your direction. You are so upset, and you start revenge trading and getting back into the trade. And if you want to work on your entries, check out the videos in my Forex basics. But that is essentially what a stop loss visually looks like. And this is why we have stop losses. In case price says, no, this ceiling is too strong, we're going down even further. You safeguard your capital. We choose our stop loss by making sure that we are covering the previous structure level. So guess what structure level this long position is covering? If we went in for a buy, it's covering right here, and it's even including the wicks. Because look where my dashed line is going right here. Look at that dashed line. You see how it's giving the wicks right here, this sell wick? See how it's giving it some space? It's not quite there yet, because we're still in the trade. If we had entered in, we're still in the trade. You understand? So we don't put our stop loss here. You could put it there because you're covering this wick, but that's kind of, that's if you know for sure that this is a good entry level. Right? Right here would be your best bet, because you're making sure that just in case it wants to play in this area, just in case it wants to touch your, and then, put you in an emotional roller coaster like the market does. Now you see why people don't use stop losses, because they don't want that to happen to them. Because you get so into the, oh, I have to win the trade. Oh, I gotta make the money. I'm from round the way. I'm leaving with something. No, because no trade is a guarantee. No trade is a guarantee. All right. So keep this in mind, you guys, when you're choosing your stop losses. I don't just throw a random, I don't just randomly drag it anywhere. No, you have a stop loss so that when you have huge sell-offs in the market, and you have your banks that are ready to manipulate the market and manipulate other retail traders that don't really understand overall market structure. Because these big banks, these hedge funds and these institutions, they're not looking at 5-minute time frames. They're looking at monthly time frames. They're looking at weekly time frames. So imagine that if you're not a retail trader that looks at the higher time frames just to gauge where you are overall in the market so you can see it through the eyes of big money. Okay? So this is how, like I said, we choose our stop loss, okay? And if you are struggling with finding a good area for a stop loss, then that typically means that you need to work on your entries, which more than likely means you need to work on finding strong structure levels, one, and two, identifying your trend, your overall trend. Remember, the trend is your friend. So you don't want to go against the trend just as a means of making money, especially when you're first starting out and looking for that consistency factor. All right. So with that being said, you guys, I will see you in the next one. Thank you so much for your time.